please welcome Hristo Odiseev.
Thank you, Hristo. It's a pleasure to be here. Actually, the last time I was here was 3 years ago, so it's my second chance to speak in front of Bulgarian audience. The way I plan to make this presentation is actually to be interactive towards the middle. The first part is I would like to walk you a bit through myself, the company I work for, and then I would like to speak about the online transition from the last 20 years and how it enabled FinTech companies. And after that, I would like to speak a bit more in detail about what our company is doing, something that probably is going to be very interesting because it's considered one of the most innovative companies in Europe in the FinTech industry. And that we can move to the first slide. So we're going to talk today about CrossLend. And CrossLend is Europe's debt capital securitization platform. I know that sounds super foreign to you, but I'm going to talk about it in just one more slide. About me, very briefly, I consider myself an entrepreneur. I've always been, since my childhood. I used to build all these, incredible little things out of spare parts. And not surprisingly, I became a software engineer. So the first 10 years of my career were in software engineering. And I had the chance to work for some pretty well-established companies like 3M, KPMG, Joker.com in IT. And later on, I moved to the dark side. And the dark side means management. Basically, after my MBA, I had the chance to join Rocket Internet, which is considered one of the biggest business incubators in the world. And I've helped the company go to its IPO. That was for about 3 years. I built their technology center, unfortunately not in Bulgaria, actually in Portugal. We scaled an IT company up to 200 people, and we supported Rocket Internet in all its business activities across the globe, from Latin America to Europe, Africa, Middle East, Southeast Asia, Australia, India, and so on. What I did the last 2 years was basically then take all my experience and pack it into myself, become for quite a while a one-man show, and build my own companies. In the last 2 years, I've managed to create 3 of them. One of them was sold last year, not surprisingly, to Rocket Internet, and 2 more which are still running. At that point, I said, me being me, why not do something completely different? And I joined a FinTech company, and namely CrossLend, the company we're going to talk about today. And not in particular to promote the company, but just to show you how innovative financial services company can be. Actually, the last slides are also focused on technology, so that it's not entirely away from the spirit of the conference. Now, yeah, that's what it used to be. And let's go on a journey 20 years back in time. We were buying software in a box, but not only software. When you wanted to do your groceries or you wanted to go to the store, you had to pass by 2-3 stores in order to get all the things you want to have, and you have to walk around and pick. But then came the internet and basically changed online consumer behavior entirely. And nowadays, the operating system is downloaded even from eBay. So eBay and Amazon and the likes of it have, have set the foundation for a lot of other industries because they basically impersonated the change in online consumer behavior. And the companies I mean are basically the financial services companies. And what do I mean exactly? Nowadays, online consumer behavior is all around, and the financial services industry was so much disrupted that we're facing totally different currencies, like digital currencies. And we also, paying in all possible ways, whether it's PayPal or just using near-field communication. And not surprisingly, that created the foundation for a lot of innovative new ways to do financial services. And some of them are peer-to-peer lending, crowdfunding. Peer-to-peer lending, we're talking about CrossLend on the one side, the company would like to speak about today. And on the other side, Lending Club and Funding Circle, very well established and well-known companies already. On the other hand, crowdfunding, we can talk about Kickstarter, helped to kickstart so many interesting products that would never have had the chance to actually start, including the smartwatch Pebble and others. How many actually have bought some or funded something from Kickstarter? Oh, so you see, I mean, like you can thank that maybe to e-commerce. Like that's my hypothesis, that they basically kickstarted all this by, like penetrating how we buy things and then introducing it to all different areas. Now, what is Crossland doing? I'm going to try to explain it in a very simple way, because on my first day at the company, like I was, or even at the time when I was getting to know the company, many people told me, like when we face people, it takes us about 30 minutes to explain what we're actually doing. Now, I've been thinking about a simple example, and I can tell you one. Crossland is operating in two segments, B2C and B2B. In the B2C segment, it's a pure marketplace where you have Jose from Spain, who wants to buy a second-hand car. It costs 5,000 euros. And no Spanish bank would like to give Jose this money. So there is an alternative way, which is through peer-to-peer lending. And that basically means that the German guys, like Oliver, they can actually give this money to Jose. Now, we're not expecting that Oliver would give 5,000 euros to someone he doesn't know, but what we're expecting is that if you give Oliver the chance to put 25 euro in 100 Jose's, he will basically do it because he's going to get a very diversified portfolio, and he's just not going to lose his money on a single guy, but will have the chance to actually benefit from putting them in 100 guys. Now, when you have hundreds of Olivers investing in several of Jose's, eventually Jose will get his money and he can buy his second-hand car. Now, why are we actually here? Why am I telling you something that's been on the market for like 5-6 years? That's nothing new. Because what we decided to do is, the current situation is like that. In peer-to-peer lending, you have isolated islands. That means that a US borrower can get money from a US investor. Same thing with the UK, same thing with Germany. So each one of these platforms, they basically start a platform for each country. Now what we have done is, this is not so much technology, but it's basically an example of financial infrastructure. We have set the financial infrastructure to take a loan, buy the loan on behalf of someone else, and turn it into a bond. And what is a bond? Bond is like a stock. It has a number, and you can just buy it. Immediately, everyone from any country can invest in this guy. So Oliver is actually investing in a bond, and he knows everything about Hussein. He's confident that he can do it. So we are actually a cross-border platform. And that gives us tremendous potential, because suddenly we have one platform, we use one mechanism which helps us to turn any loan into a bond, and it could be traded, if you want, worldwide. We're operating right now in Europe, but I mean, besides some legislation that we have to overcome, there is no reason why this mechanism cannot be global. Now think about the even bigger opportunity, which is B2B. What if we are not handling Jose and Oliver, but what if we're looking at a big bank that has about 10,000 loans on its balance sheet, and they want to sell these loans in order to free the balance sheet, which means what we have in Europe right now is many banks, due to regulation, they are completely liquid, means they cannot give more loans. And that's the big problem in Europe right now. And they cannot give them because they're basically told by law, you cannot give more loans. You have to maintain a certain amount of money in your account, and that's it. And then on the other hand, you have a lot of people with really good income. I mean, like most of you work in the IT industry, you're actually representing this in Bulgaria. But if you look at Germany, many people do not want to pay the bank to actually have their money safely there, but they want to invest their money, which means they're expecting 5-6% interest rate, and no one is giving you this. Even today in Europe, we have situations where you have to pay the bank, and in order to have your money there. So, what if we connect a bank that has all these loans totally stuck on the balance sheet, give them a chance to acquire new customers, and then find an investor that actually is totally stuck, like a pension fund that needs to generate interest for the pensions of the people that invested their money in them. And this is not like Facebook. It was pitched like $1 billion opportunity. That's more like $1 trillion opportunity, because you know that money is the fuel of business, and that basically means we're going to free money and circulate them and create more momentum in the whole European economy, but hopefully not only there. I don't know what I did, but I can correct it. So how is the platform actually working? Now we're coming to the point where we can talk about the platform. I hope it was not totally confusing until now. It was making sense. The platform has three main areas. One of them is onboarding, another area is the investment process, and the third one is the statistics reporting. What does it mean? What is actually onboarding? Onboarding is very simple. In order to invest money on a platform like ours, you have to pass through a so-called KYC process, and KYC is very common for financial services. It means know your customer. So basically, this investor is screened. Then we say, okay, this guy is safe, or this company is safe to take on the platform. Once on the platform, the investor can actually even say, okay, I want to buy, like bonds. As I said, loans, on the other hand. They want to invest in bonds in a certain geography. They want to invest in certain risk classes. And that's pretty straightforward. They're basically several select boxes, several text fields. And once they have defined that, save it. And then they say start. And start means how to invest, because no one, as an investor, would like to pick 25 euro pieces for each loan or something like that. They're going to buy full of them, and they're going to buy thousands of them. So in order to do that, we have a special auto-invest tool that is juggling the numbers and picking bonds for all the investors and creating the portfolio the way they want. And once you invest money, you actually care about the performance of what you invested in. And that's the third part, where we have statistics and we have reporting for these investors. Statistics and reporting, I've taken them from our B2C model. Some may say I've intentionally smudged the numbers so you cannot read them, but it's not intentional. In any case, in the middle, you see the typical dashboard. The first two graphs are the allocation of a portfolio in terms of risk classes, A, B, C, D, E, F, G, with A being the best in terms of the safest, but with the lowest return, and the latter ones basically being the more risky, but with a yield of 15-20% sometimes. And then on my left, your left, we have an overview of what a note looks like, just a very simple overview. And then on the very other end, we have a list of all the notes you have invested in, with these kind of greenish, bluish boxes are representing the status of a note. If it's now being repaid, or it's now completed, it had paid all the interest and it was completely paid back. And this is like the typical process. So whoever didn't understand it until now, now this should make it totally clear. On the one hand, you have a borrower, that's still B2C. You have the borrower requesting a loan, and then the bank decides to grant a loan to someone, and then Crossland jumps in, aggregates all this data. On the other hand comes the institutional investor, onboarding as I explained, and then activates the investment strategy, and then we start matching on the marketplace. Eventually we securitize and everyone gets what he subscribed for. The institutional investor gets the notes, the loan originator or the bank that issued the loan, granted the loan, that's the correct wording, receives the amount that they expected for that. And how do you get actually your regular interest, right? Everyone expects to get a monthly or yearly interest. In our case, it's monthly. It's very simple. We just go all the way and we forward it. Basically, borrower repays the installments for the loan originator takes the amount, then sends it to Crossland, Crossland takes the fees, and then sends to institutional investor. Now, I'm not going to read all this. It's just to give you an idea, what does it look like offline? I mean, like, we're doing all this digital, but by law, we also have to really generate this, print it, and put it somewhere. And this is what a note, a bond, actually looks like. And I believe these ones can be actually read, and you can basically see that the third line to the very left is basically the minimum amount investor can invest, 25 euros. And the line before is basically saying 3,000 euros, that's the amount you want to, that's the total loan. When you go down, you can see the duration of a loan. When you go further down, and up, actually you can see how much is expected to repay for a loan, and so on and so on and so on. And these are the final terms. Once you have the final terms, you basically start reporting all this to through all our APIs, to all the institutions we have to work in order to make this like announced as a stock, as a bond. Technology. So I found this particularly interesting. I know that you may be totally fed up with seeing all these kind of super smart, graphics, but why I put this here? Basically 2 points. This is something delivered from Bain Digital Technology, and what they did here is they have compared where FinTech startups are and where incumbents in the financial services are in terms of technology. Now, I'm not going to go all this through, but I just want to show you 3 things. So when I was talking to banks, because that's basically a lot of what I do, what we're facing there is that, can you actually guess how long is a sprint in a bank? Agile approach, sprint. Can you guess? Some wild guesses. How many? 3 months? No, more. 6 months. That's what I heard last, and I was like, oh God. In our company, it's 2 weeks, and I know that 2 weeks is like even a bit too much for some, but it's not 1 week. But I can explain you why a bit later. That's one of the things I wanted to show you. The other thing is our company is completely cloud-based. We almost have no infrastructure. We don't have servers, anything like that. We're totally Amazon-based. Everything is in the Amazon cloud. And to put it like this, it's maybe not the cheapest, but it's definitely in many ways cost-saving and trouble-saving. And we actually, for security and compliance reasons, it's a lot easier because Amazon has come up with pretty good, like strategies and policies for that, which are public and very easy to apply. Having said that, one more thing, and you can see the last line. It's basically averse to risk and allow experimentation. And that's a very big difference. In banks, you definitely have no space for any experiments or flexibility, at least not many that I know where they can do that. In our company, there are experiments all the time. And we're not experimenting with our clients, but we're experimenting with new technologies, new ways of doing things. And now comes, I think, the most interesting thing, just to showcase not how great Crossland is, but how different this kind of new financial services companies are, like ours. There is a survey from PricewaterhouseCoopers for 2014, where on the one hand they ask banks, well, how much of your core business is going to be disrupted by companies, by startups in the FinTech industry? And they said a quarter, which is 25% of the core business. We're talking here about trillions, and then 1/4 of that. And then they also made a survey of how much is the spend on IT in the financial services industry. And for 2014, it was $215 billion. Then they also checked, like how much was invested in FinTech startups and that was about 12 billion. So what we have here is, so running all this fintech startup industry, the new one, it takes about 20 times less, including IT, takes 20 times less than actually running only the IT of the big banks. And still, these very few companies that are so much underfunded compared to the big ones, they will disrupt 1/4 of the financial services industry. Okay, I keep pressing one button, which is not the right one, but this is what we do and how we do it. As I said, we're open source. We use over 40 frameworks, libraries, and dev tools. Many of them are familiar. I have not put all of them. Another thing that's interesting to know is, as I said, we are Amazon AWS hosted. Something else that's totally interesting, in a B2C model for a financial services company, you have to be very visual. We have very nice dashboards. We have a lot of interfaces to our end clients on both sides. But in a B2B scope, what you're facing is a completely transaction-based model where on both sides, on the loan originator, basically the bank with the 10,000 loans, you have an API to get all the loans. Then on the investor side, you have investors API to basically allow them to buy this or subscribe for these loans. Then we convert them into notes and give them to them back. So in a way, it's a completely different world. Yes, it's visual, but not so much. And that basically underpins that we are now becoming more or less a more API-driven company. And we have so many APIs. We have APIs for absolutely everything. I have saved you from the actual process of how we give loans and so on, and how many external services we have to ask to do that. And of course, it's low cost. As I quoted already some numbers, you can see that we're talking here about less than 10 paid services. That's not quite a lot, to be honest. And we're not paying a lot. Now, this is our development process. Pretty familiar. Maybe you will find some things you don't like, but this blue box there, the to-do box, it's so much work for our product managers. Why? Because it's not just about writing specifications and acceptance criteria, but it also includes a lot of the things that you're seeing later in our release process. You can see that we are picking a business owner which gives business reviews all the time until we create a specification for one single feature. Then we have legal biting our necks literally all the time, checking everything we're doing before we give it for development, because otherwise it will be too costly and you have to change it all the time. And then you have, I've put only one, BIW is one of the banks we're working with, but then we even give the new features we want to develop and discuss them in advance with the external providers we work with. So then when you think about our 2-week sprints, I think we should get some kudos, because this is extremely lengthy process, and it requires a lot of patience from our product managers. And as you see later on, these steps appear again just before release, where they passed second, third validation, and so on. Now, as I promised, the talk would not be too long, but I want to show you one more slide. And what could that be, this slide? It's actually quite unexpected. And it's our core values. Why am I showing the core values of a fintech startup? Because imagine in what situation we are. On the one hand, we are new on the market in a very traditional conservative industry. On the other hand, we also have to attract clients, like customers. So what we definitely stand for is being responsible for what we do, being totally transparent. As I mentioned, we visualize all the information we can. And then, of course, flexible, startup, and very cooperative. We are traveling all around the world every now and then. I am having 6 flights this week. So we are cooperative, believe us. And that's basically it. I'll be really happy if you ask me some questions. I saw some people yawning. I know it's one of these very hardcore topics, but I'll be happy to answer any questions you might have. Super. One question.
Hi. I have a question about your onboarding, or are you onboarding or outsourcing your development testing services, testing units you have on the product?
So if I understand the question correctly, you're asking me if we are giving away some of the services we do to external parties, correct? Okay, so I can give you some overview of what we are required to do, because as a financial services company, yes, we are a startup, but yes, there is regulation we have to always keep. And for example, our customer care is they're locked in a small room, shades down, and when they work with clients, that's one thing. So it's one of the things we definitely at this point we cannot outsource because it has to be an internal service. Then another thing is we do have partially outsourced our IT. I'm personally a believer that, because obviously I've done that before. One of the businesses I built, actually the one for Rocket Internet, was a nearshoring operation. As I said, about 200 people working for it. And then the next one I built, again, a nearshoring operation. So I tend to understand something from nearshoring. Is that the way we first did it was basically working with freelancers, never a good idea. And what actually could work for us is focusing a whole vertical of the product and giving it away to one team. And on the one hand, we have to be convinced that they're the right people, of course. On the other hand, we can also benchmark how we were progressing when we're doing that ourselves, how we're progressing now when they're doing this, and how well does it work. And usually when you do outsourcing, you also try to de-risk. So the first projects are something that's not your core business, because then you have a big problem if it doesn't work. And something else that will be interesting maybe, can you imagine what is the most stressed department in our company?
Product development, I think.
That's the second most stressed.
HR?
No, legal is always stressed. I mean, they're always stressed. I'm talking about which one?
HR?
No, I'm talking about tech. No, it's the QA. Because we just freak them out, they test something and then suddenly, legal jumps in and says no, and or the one of the external parties says, not exactly, and it goes back. Then they have to test again. So, if you're in their seat, QA is for us one of the most important departments on the one side. Second, they are one of the most frustrated departments because they keep testing things that they already tested with some modifications here and there. But yeah, that's a funny fact.
Thank you.
Yes, actually, I have two questions.
I'm so happy, I've been at 3 presentations and no one asked questions. And I don't see so many people asking questions. That's a good thing.
Yes, actually, it's interesting to see an entrepreneur that is selling his own business.
I mean, not entirely mine, but yes, I'm working for it.
So actually, this is the first question you mentioned. I'll just say both of them at the same time. The first question is, you mentioned 3 companies. What was the domain all of them were working on? Because I got the impression that this is only the last one.
This is the 4th one. The previous 3, one of them was a B2B time management system with budgeting. It was not extremely successful because we basically underestimated the market. I mean, there are very good tools out there, and everyone wants to build one of these. So you kind of lose yourself in the sea, in kind of even the ocean of all these applications. So that was the big problem. Technology and product-wise achievable. Another company, the one that I sold, was a marketplace for holistic healthcare, basically something like ClassPass. Have you heard about ClassPass? It's a US startup, super successful. They are challenging the model where you subscribe for a gym and you have to go to that gym only. And instead, you pay for about the same money for a card with them. With this card, you can go to any gym you want, to dance classes, to musical classes, to whatever you want. So basically, they have 300, 400 participating parties, all sort of leisure and sports activities per city. So super successful model in the States, and we did the same in Europe. Which one is it? Well, yeah, I mean, the company I worked for before Rocket Internet, they're actually doing that quite successfully, replicating models. And they're looking at models that work and keep doing them in other geographies. And it has proven as a winner. You know, like it's of course very hard to work with this company. I'm one of the few people that actually stayed for whole 3 years. I think I was number 17 out of about 20, 30,000 people that stayed for 3 years because the speed is, you know, at which you have to run all the time. It's one level above consulting at the top 4 consultancies you maybe have heard what the lifestyle is. And the third one, as I said, is my own kind of nearshoring operation, but it's focused on completely different clients, so I'm definitely not trying to connect it with this one. So yeah, all over the place.
Thank you very much. And the second question is, do you have statisticians in your team? How many are they? How experienced are they? How do you have predictability, risk management?
Of course. That's what we do. We have a data science department. And the data science department basically has a data technology, which is more towards BI, business intelligence, and then there is a real kind of risk-focused part. I cannot disclose too much, but basically what the risk part is doing, which is probably the interesting part, is imagine running this B2C marketplace, having this single guys on both sides. We have to be able to score them in a unified way, right? So we get people from all around Europe. The external services that we consume, they come with different metrics, and yet we have to come with one unified risk class for each one of them. So basically, if you invest in Jose in Spain, it may have a risk class C, and if you invest in Oliver in Germany, he may have a AA, for example. So that's still, you know, like that's still a unified approach, so that's totally realistic. It's not kind of made up. It's very tricky. And then another part is when you actually apply the B2B model where you're actually buying 10,000 loans, you have to ensure that the loans you are buying on behalf of someone else and want to securitize, convert into bonds, you have to ensure that these are really good loans so this investor is happy and comes back, right? We don't want to just do one deal and this guy goes bust because we just sold him some crappy loans. So we also have to internally score all the time the loans, again in a unified way, based on probability of default and so on, and ensure that it's, you know, like it's totally fair. I see another person asking questions. Super. I hope that helps. I mean, like, hope I answered your question.
Hi, it's a rather financial question. When you're working in your B2C model, what can you tell us about the collaterals in the transactions?
Oh, that's a part I cannot comment right now. But we basically we're not working with right now. We focus on consumer loans. I think that's partially answering your question. So we don't go for collateral. No, I mean because your question was someone want to buy the car. So yeah. Is the car the only collateral? No. It's a consumer loan. It's not guaranteed in a way. It's a risky business.
It's not guaranteed.
But you know, like as I said, the idea is that investors do not buy a complete loan of 5,000 euros, but they buy a small chunk of it, one part of the note, and this way they can invest in 200 Jose guys. Yeah, but that means that you're because you're sort of a marketplace. All of the transactions in your B2C model are with no collaterals. Yes. Okay, yes. Thank you. That will make it quite tricky, actually, at first. Thank you. That doesn't mean we don't want to do it one day, you know. There is a question.
So can I ask? So we saw the flow about how you deliver the values, the functionalities. And I have two questions. Can you give some examples how this is manageable? I mean, from the to-do to the closed state. And do you have some statistic? What is the average time for the functionalities you deliver? Or
that's a workflow that I introduced about a month ago. It's not measured yet. If I have not introduced it, it will have another line of extras that I basically removed. That didn't make a lot of people happy because they were used to them, but they had nothing to do there, the things that were included. And it's funny because you probably have noticed this, it's probably not only valid for software development, but people get used to certain things, having them there, and they do not come often enough to clean up. Now, if you want me to be more concrete, how to ensure quality and what is the speed, we have faced a lot of frustration from the business in the past because certain tickets may bounce back and forth for like, I don't know, a month or two, something like that. That's extremely frustrating. With applying this workflow, we want to actually fix it. We want to fix it in a way that some of the challenges we faced is that the business owner was not always clear. And when you have no clear business owner, basically 2-3 guys, it's like sending an email. You know, you never send an email to 3 guys. You send it to one, and the other ones are CC. If you do send it to 3 guys, no one of the guys would know who's actually responsible. So you never get like an answer on time. Same thing here. You know, like one of the ways to streamline this is first cut a bit of the stages that we had introduced with time, just to kind of do metrics, but that were actually making it even more messy. No one understood from the business how it works. Second, by basically assigning a person, for example, that especially in the business review, that was one thing that was missing, and it shot us in the leg for quite some time. And now we're straightening it. And you know, like one of the things that I always recommend when you want to kind of start new, you know, is, for example, we have this unique opportunity right now. We actually focusing on B2B, and for us that means we can redefine our process. We can just remove things that didn't fit anymore, that we learned that don't work, and it doesn't impact in any way anymore. You know, like because now we have a different reality. I found it very refreshing when we started our B2B model. Then we could start with this instead of what we had. I hope I managed to answer a bit your question.
Okay, we have time for one last question. The colleague here.
Hello. Very quick question. A number caught my attention. You mentioned that the banks are forecasting about a quarter of their business will be lost to FinTech startups.
Yes.
That very neatly coincides with the amount of business that landline operators were expected to lose years back when mobile and internet providers and stuff were starting. So can you give us your own assessment?
Do you mean in terms of being an insider into that industry, or do you mean
how much you as a member of the startup expect to disrupt?
We actually, you know, like we're seeing a world where many things can run without the banks anymore. And the funny thing is that the people working in the banks, they do not really perceive that. They do not feel it. And the banking business just goes on as usual until it kind of degrades and degrades and degrades. So what we're already seeing is that banks are shutting down a lot of their offices because of online banking. That's not the case in Bulgaria, but that's the case in other countries. You know, like not, you know, like what's left is basically the ATM machines in order to get cash. And, you know, like even they become less and less relevant because I would not say that NFC was well adopted, you know, at least in Europe, but I guess in the US it has quite a wider share, for example.
Actually, one of the Bulgarian banks is switching to fully automated banking offices. You can put money in, withdraw, everything is automated 24 hours a day.
We have this. We have, for Germany, I can talk about 2 or 3 companies already. One of them is number 26. And it's basically a new type of bank. It's just one office. It's all online, no branches, no nothing. And they have several 100,000 customers after just 1-2 years of operation, I think. And that's huge growth, right? So several 100,000 customers. Then with all the fees that they're generating and so on, almost no overhead. Like how much does it cost to rent like 1,000 offline sites in order to put some people, cashier people there to serve you. Like completely different cost base, and that cannot be matched by the banks on the long term. But one really big strength of the banking industry is that it's extremely powerful yet at this very moment. And many of the fintech companies you're experiencing right now, they will be actually acquired, and this business will actually merge into, all the big names will actually stay, and they'll be operating then these acquisitions as under their brand. That's what I'm expecting, to be honest. I've seen it also with Tesla. They're amazing, they're great. Yet nowadays we have how many? 10, 20 manufacturers producing electric cars.
Well, that was their mission.
So
They were
eventually all the traditional brands are still staying, and they're innovating and acquiring businesses that give them the chance
So
to...
we're expecting the banks to evolve.
I couldn't hear you, sorry.
You're expecting the banks to evolve.
Yeah, I think in the long term, the branding will stay, just the services will change the way they offer them.
Thank you.
Yeah, welcome. Okay. Thank you.